You may have already noticed that the market has shifted. That's right, the Phoenix, Arizona housing market has become a balanced market again, and buyers who feel they lost out on the buyer's market we had last year will be getting another chance provided that the mortgage rates are stable. This is Celina Acosta with your November 2023 housing update for the Phoenix metropolitan area coming up. Wait, what does that mean that we have a balanced market? When I say this, most buyers assume it means that home prices will come down. But no, that is not the case. You can have a balanced market where the prices stay the same or even go up a little. When a market shifts, the first thing to move isn't the price. But what I'm seeing right now, buyers are buying within 99% of the list price combined with higher seller incentives. I keep telling people, don't come out of the gate offering 10 or 20% off the list price thinking that you're gonna get the house. Come in and offer list price or as close as possible depending on the situation, and ask the seller for concessions and other benefits to you, such as closing cost assistance, credits, rate buydowns, etc. Over the past 2 months, as mortgage rates peaked at 8%, weekly price reductions increased in numbers by 33%. Meanwhile, the median seller incentive to buyers increased from $8,000 to $10,000 so far in November. Seller incentives are more prominent in the first-time home buyer price range of $300,000 to $400,000, and also in cities with a significant number of new home communities. Most builders are giving out very attractive incentives to buyers, such as lower rates and paid closing costs to home buyers. So home sellers have to compete and therefore are willing to give out similar concessions as well. How long will this trend last? I don't know. However, the higher the mortgage rates, the higher the cost to the seller will be to buy them down. Mortgage rates are impossible to predict. Experts try, but they are wrong most of the time. However, there are strong rumors that the end is near for rate hikes by the Federal Reserve. If mortgage rates decline in response, then the current market decline will be short-lived. I personally do not think that the mortgage rates will come down significantly anytime soon. In short, it's a good idea for buyers to stay engaged and aware of the market by identifying opportunities in November and December, because once 2024 begins, that's the start of the peak home buying season, and it will be back in full swing and there will be more buyer competition. Here in Phoenix, Arizona, spring is the high buying season. If you're a home seller, this is not a good time to list your home higher than what the market is telling you. As the seller's market already switched to a balanced market and even a buyer's market, depending on where you are, so there's really no room to test the market by pricing your home higher than it should. The outskirts of town is what gets affected first. I always look at what is going on at the edge of the metropolitan area, and that usually tells me what is going to happen in the next 60 to 90 days. As of the middle of November, the following cities are buyers' markets: Surprise, Litchfield Park, Goodyear, Buckeye, Maricopa and Casa Grande, Apache Junction, Gold Canyon, and Queen Creek. Balanced markets are Cave Creek, Peoria, and Sun City. All other cities are still sellers markets, but they are weakening fast. So overall, I will call this a balanced market. Seasonally, sellers always want to wait to list their homes at the beginning of the year. They always tell me, let's wait for after the holidays, let's wait for January. While it is more convenient to wait for the first quarter of the year, under these circumstances, the benefit could be offset by a weaker market. Because if every seller thinks this way and wants to list their home in January or February, well, you'll have a lot more competition. I already told you that we're no longer considered a seller's market, because it's more competition from new listings, so you should expect more days on the market and the possibility of price reductions. The determining factor that could change the course of the current market trend is mortgage rates, which have been very unpredictable and volatile this year. For those who are in need of selling, you may get your asking price, but at a higher expense as long as the rates are elevated. As a result, sales price measures will not show a decline, but the seller net proceeds will be squeezed. There is high inflation, high interest rates, high home prices, low demand, low inventory, frustrated buyers and sellers. It may not be the market we love, but it is the market we're in, and this is the market we have. I feel your pain. I lived it before, and it lasted several years. I don't know how long this market's going to last, or the aftermath of this market is going to last, because it is different. but we're in this together. There's always going to be people buying and selling, but this feels more like a hangover after a big party. And so it is painful out here. I hope this information was helpful. Like and follow for more, and until next time.